Yesterday's statement by the U.S. White House National Security Advisor Jake Sullivan that rumors regarding possible new sanctions against Russia were false calmed the market and allowed oil prices to rise above $76 per barrel. Although the U.S. Secretary of State has confirmed the intention of G7 leaders to discuss a stricter sanctions regime, investors assume that measures affecting energy will be out of the question. Consequently, it's necessary to be guided only by the balance of supply and demand. A gradual decrease in crude supply caused by the announcement of a volatility production cuts by OPEC plus oil producers contributes to lower prices. Higher tensions will persist until the end of the summit. It's what is mainly responsible for the asset's limited gains. Despite a local upward movement, there are still no dramatic changes on the trading chart. The quote entered a correction and returned to the previous local high, which led to a decrease in the volume of long positions. Based on the asset's past behavior, the market may reverse in the 77.20 area and hit towards the 74 mark. However, if the quote breaks through this range and consolidates above it, its upward correction cycle will continue. Meanwhile, the yellow metal fell below $2,000 per ounce, reaching the support level of 1,970. If sellers fail to overcome this zone, the volume of short positions will decrease, thus enabling gold to rebound. However, if the price goes below 1,970, the metal will most likely extend weakness. The key event for gold traders was some talk about the US debt ceiling. More precisely, traders priced in statements that the Federal Treasury had enough money at least until June 5 and now until June 1, as Treasury Secretary Janet Yellen noted earlier. In other words, there is still time to come to some kind of agreement and raise the national debt ceiling. This factor has significantly reduced the general risk and risks of uncertainty that always dampen demand for safe haven assets, including gold. Yesterday, the ruble showed increased volatility, but nothing fundamentally changed. The dollar has been trading at around 80 rubles for days now. The Russian currency is trying to stabilize, but its efforts are hindered by ongoing uncertainty about new Western sanctions, so the ruble will most likely fluctuate until the end of this week. The market is expected to stabilize in the new range only at the beginning of the next week. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.